I guess I need to get back to my economic origins a bit. The devaluations happening all around the globe are all I can see. Their lack of attention in the media means that many people are unaware of them. The Egyptian pound was devalued by 40% in March by Egypt. Furthermore, the United Arab Emirates is stepping in to save the day. Also, devaluations are happening elsewhere. Japan is what you see. That is to say, it has had to step in. Why is this happening? I find it quite intriguing. In my opinion, Bitcoin is one of the current phenomena. An insurance coverage does exist, you know. An insurance policy is the initial idea. Why don't I give it a shot? Anyone who has done it in Egypt or Nigeria is another 50 to 60%. To the degree that they have, these unfortunate souls, they are always discovering new ways to increase their wealth and buying power with that one currency. They know how to fix this, and I need to fix it immediately. The vast majority of people on the planet have no idea that major currency devaluations are taking place at this very now. Several fiat currencies are seeing a real-time collapse in value, including important ones such as the Egyptian pound and the Japanese yen. The yen, the world's fourth most valuable currency, is hitting lows not seen in decades, if not in recorded history. Most people still don't know about these incidents, even if they're in the news. The impending demise of fiat currencies has been brought to light by Cathie Wood, who recently pointed the finger at current monetary theory, saying that it is the cause of central banks' incessant money printing. But this time, Bitcoin is the solution that Cathie has pointed out. She now predicts that Bitcoin will reach $1 million per coin by 2030 due to its fixed quantity and inherent scarcity. Let me take you back to when Art Laffer and I were initially learning about Bitcoin and working on our first white paper together in 2015, when he read it and remarked, "Wow, hold on a second," and our connection to that moment. From the moment we met, this has been my expectation. The golden window was shut by him in 1971. I have been seeking a monetary system based on rules, he declared, plus he was utterly enthralled by it. Rod, you're familiar with him? Also in Nashville, Tennessee, he is. The prospect of taking private funds back into consideration excites him greatly. As someone who has invested in the stock market, I can tell you that the thought of Fed Chairman Powell and the other governors publicly stating their disapproval causes the financial markets to panic. What they're saying is that it's been incredibly disruptive, and more so in recent years, and everyone is freaking out about it. With many cycles under my belt since I first dabbled in the financial markets in the late 1970s, while still a college student, the concept of a worldwide digital, decentralized, private, rules-based monetary system is both provocative and profound. In my early days, I simply witnessed money going berserk, and have been a student of, all right, how can we make this different? When we happened across Bitcoin, or rather, when I happened upon Bitcoin, everyone did. Wow, I thought this is very fascinating, potentially game-changing. I then asked Art, how massive could this be? When the price was $250. Next, he inquired about the size of the U.S. a monetary base. So, it was $4.5 trillion when it was first announced. The current amount is $7.5 trillion. Something should be revealed by that. So, that was his response, he said. Because of this, we have continued to use it. Are all three of money's functions possible for it? Inaugural white paper was that. Yes, we did conclude that. Does this seem like the start of a new kind of investment? Yes, however, when considering this monetary system concept, the current halving of the Bitcoin supply from 1.8 to 0.9 is bringing the rate of increase below the long-term average of gold supply growth. However, there is a distinction, and when I mention this to people, it's like a light bulb moment. For them, when the price of gold surges dramatically, miners ramp up their production, which increases the supply. And believe me when I say that when it comes to Bitcoin, that is simply not going to happen in the investment sector. Once more, they look twice. For the first time ever, our growth rate is lower than that of gold. Gold, according to Stan Druckenmiller, is a 5,000-year-old brand. At least that's his way of putting it. I need to start paying more attention to Bitcoin, as it's been a brand for a decade. Having it also seems like one of those light bulb moments. In the world of finance, thanks to the approval of spot Bitcoin ETFs and the introduction of, what is the net new YACing? There must be billions of dollars in there. Many of these individuals were likely not involved in the previous halving, but were Bitcoin holders during that time. They predict that the price of Bitcoin would rise due to the halving, citing their experience from 2017. A slight swing occurred prior to the event in 2000, I suppose 2021. Consequently, the financial market is predicated on certain expectations. As a result of this fantastic development, Bitcoin's value will rise. However, the Bitcoin ETF introduces a new level of player. It will be fascinating to observe their responses in the event that things don't work out as expected or if the price of Bitcoin rises. You have no idea. Yes? And your opinion? Sure, I see your argument, Tappy. And I also think about Mike. Mining dynamics are extremely competitive, which is a hallmark of Bitcoin's lovely free market dynamics that are absent from other industries. So when the hash rate increases and moves closer to Mike's goal, the turnover, and the entities actually providing the hashes appear very different from how they did a decade ago. And hence it's commendable that you, Mike, and Harry have weathered many market cycles. It demonstrates that you are well prepared for the life of a Bitcoin miner. The concentration of mining, however, is becoming an ever-present worry. Plus, Bitcoin mining is a really small operation. On the other hand, there is a staggeringly high turnover rate among mining corporations and pools. Even the consolidation isn't appreciated by many people, in my opinion. With steep price drops and periods of declining hash rates, the mining restriction in China is, in my opinion, a prime illustration of the concentration of mining in that country. A new market emerged that was prepared to buy mining rigs and start their own operations in the event that the hash rate dropped by half due to the restriction on mining. Ushered in a completely different ecology. According to my analysis, that is a characteristic of free markets that can only be found in systems such as Bitcoin's. At the margin, the price will be controlled by the behavior of buyers and sellers. Then on a higher level, there's an ETF for institutional holders that holds Bitcoin. Plus, the strength of this ETF base's holders is still up in the air. I can assure you, though, that there will be desperate purchasers. The real holder base will also see a turnover if this mining death trial story takes place. Regardless, it will never go out of style on any level of the stack. It seems like that's the general idea that Mike and you are trying to convey. 5 lines of code are perhaps the most important thing I've learned from this. That was news to me. According to what was said, that seed has just set off this Cambrian explosion.